Hi, so far you know the payment terms and payment methods. In this session, we are going to see about the export finance. What are the loans available to the exporters? First one is the packing credit or pre-shipment backed loan. This loan will cover from the cost of the product till the shipping of the goods. This is a short-term loan. This can be anywhere between 180 to 270 days. This loan can be taken either in Indian rupees or foreign currency, but it is always better to take it in a foreign currency because the interest rate will be low. Though you are taking the loan in the foreign currency, the amount you will get in terms of in the Indian rupees account, so that it is easier for you to pay your supplier. But in the case of loans, the bank will ask for a collateral or a performance bond or a performance report, how you have done the exports so far. So if you are, when you are a new exporter, it is better to have a collateral if you are going for a bank loan. So this is the one of the reason why we do the SWOT analysis. The SWOT analysis, if you have a very less working capital or you can secure only certain amount of money, it is better to plan accordingly so that you can avoid certain last minute hurry-burry or failures. So if you have a collateral, you must know the value of your collateral. Here you have to show the purchase order. You have to show the purchase order because the bank has to know for what you are taking the loan. So once you get the packing credit, you can pay it to your supplier. But in case of if you do not have a collateral or if you don't have a performance to get a loan, you have to use the advance payment method, or you should have a good relationship with your supplier to get a credit, or you should have your own savings to purchase the goods. So it is better to decide what your capacity is before approaching the buyer. Even when your buyer is ready to give you a order more than your capacity, it is better to ask him for the trial shipment which can be within your supplying capacity, so that you will not miss the buyer, you will not be in any trouble in getting the working capital. At the same time, you will be able to do an export order. So it is important that you have a good negotiating skill or you are able to speak to your buyer. In most of the cases, what happens is the exporter will try to satisfy the buyer in order to get the export order. But in case of exports, there is a huge opportunity because there are so many markets and you know the potential of your product in different markets. So you need not worry about a particular buyer or about a particular capacity or order quantity. The next one is the post shipment finance. In case of manufacturers, or if you are choosing a DP or DA payment, even you have done the shipment, you have to wait for certain period of time to get the payment. In such cases, we will go for the post shipment finance. This is a loan after the shipment. So in this case, you will have your documents, you will have your BL copy, your certificate of origin and every custom copies and every documents you will have. So with those documents and the bills, export bills, you can take this post shipment finance. Here the bank will discount, as in the case of Usans LC, and they will make you the payment. So and the other two are the duty drawback or the MEIS incentive. Certain product will have a higher duty drawback, certain product will have a better MEIS incentive. In such case, you can go for which rate is high, whichever rate is higher, and you will be able to get only one incentive, and that will be, even in case of duty drawback, you will get the money in your account, which your exports account. In case of MEIS incentive, you will receive as the duty scrip, which you can sell and get the money. Duty scrips are useful only for the importers to use it against the import duty. The next one is the Exim Bank Finance. If you are getting a project or an export order worth of more than 5 crores, in such case you can go for Exim Bank Finance. They will have supplier credit or the buyer credit. Supplier credit is the loan given to you, and in the buyer's credit they will establish a line of credit and give your buyer the loan to buy the product from you. So this is useful only when you have a higher value export order and or you have been exporting for a long term, or if it is a service oriented exports. Though it seems to be having a trade finance support from the bank and the government, if you are new to exports, it is better not to depend on these finance if you don't have a collateral or any supporting capacity to do the exports. So it is better to determine your capacity before going for or approaching a buyer. In the next session, we will see about pricing strategy or how to calculate the price for your product.